Hello, I'm Maya Norbury, and welcome to the March 2025 Insight vlog on changing size limits. You may be aware of some background chatter on the upcoming changing size limits for companies, and in today's vlog, we're going to explore what that all means and what the implications of that are for businesses and accountants. So, in today's vlog, we're going to cover what those current rules are, what's changing and the background to that, some real life FAQs, which have been asked of us, and I think these are really good because I think it really reflects what's probably on lots of businesses and accountants' minds. And then we're going to have a look at what we know so far about these size limit changes and the impact they have on charities. So those current rules. There they are. There are your current company size limits. For a company to change size, it will have to breach two of those thresholds. So, for example, a micro company would have to breach either £632,000 of turnover, 316k of assets, or 10 employee numbers, and would have to breach two of those to then become a small company. A lot of the focus when we're looking at size limits is on that small threshold, because when two of those thresholds are breached, a company becomes medium, and then an external audit is required, and a lot more disclosure is required as well within their financial statements. You'll also see the slide there referring to gross limits. And what that means is it's for groups of companies to determine their size when their results are aggregated and intercompany transactions are eliminated. So there you've got your net limits for individual companies and your gross limits for groups. So in terms of what's changing, well, it's all come off the back of government legislation. The old Conservative government made some plans to put some legislation in place to increase company size thresholds, and then the elections happened. Labour came in, so there ended up being a slight delay because it wasn't quite the first thing on their agenda, but they did act quite fast. And then in October, we heard that this legislation will be continued to increase those company size thresholds. The reason that they're doing this, with the inflation over the past few years within the UK, the government are hoping that these increased size limits will reflect the economy in the UK and be more applicable to businesses in terms of that economic climate. It's estimated that 14,000 medium-sized companies in the UK will become small. And that's a really interesting statistic because it not only means the company size is changing, but it also means 14,000 medium-sized companies will no longer require an external audit. And it will also mean that 14,000 companies will not require as much disclosure within their financial statements, and will release that burden, reduce that burden in terms of their financial reporting. So there's your current company size limits, which we've already looked at. From periods continuing 6th of April 2025, those size limits will no longer be applicable. And that impact is therefore for periods ending, for year ending, after 6th of April 2026. So therefore for 31st of December year ends, this will be effective 31st of December 2026. And there they are. They're your increased size limits. So you can probably see from that table, they are quite significant. We've gone from 10.2 million of turnover as the small limit to 15 million. So quite a significant increase. Your gross assets have also increased. Anyone with a keen eye out there might notice your employee numbers have stayed static. At this point in time, there's no immediate good change that's going to happen to those employee numbers that came out with this legislation. It said it needed to be more thought out. So nothing on the radar at the moment in terms of changes to those employee numbers, but significant changes for your turnover and total assets. Your audit threshold is still going to be linked to that small, so audit thresholds have increased as well and are still going to be linked to those small thresholds. Some key considerations. So we've touched on that alignment with audit thresholds. It will be increasing in line with the company threshold and will still be focused on small. The application of the 2-year rule. So the 2-year rule is in effect, so businesses, if they have a fluke year where they do exceed 2 of those thresholds, they won't change size immediately. They have to do it on a 2-year basis and then they'll change size. And it means that, if a business has a fluke year where they exceed 2 of those thresholds, they're not going to instantly require an audit. They have to exceed for 2 years. An interesting aspect of these changes to the company size limits is that they are allowing the new size limits to be applied retrospectively. So as if your previous year end, not under the new size limits, but are being able to apply those new size limits. We'll have a look at a real life example of that in our FAQs to bring that to life. Your gross net limits, as we saw from that previous table, they've increased in line with those net limits. So for your groups and your individual companies, they're both increased. Ineligible companies, we won't go into this in loads of detail, but some examples would be public companies, so those listed, banks, authorised insurance companies, and if that applies to your business or one you're auditing, just a reminder that these size limits and that audit threshold won't be applicable, and you may still require, we probably will still require an external audit regardless of size. So if that does apply to you, there's lots of information out there and some good information on the Institute website. The likely impact of these changes, so obviously we've talked about that 14,000 falling into small. It might feel a little bit for growing companies that they're delaying the inevitable. So it might not be as well received for them if they are just delaying that process of getting an external audit. For those micro companies, so those micro company limits have increased. For example, it was 1 million of turnover for micro companies, but not all accountants will go for FRS 105, which is a standard that can only be applied for micro companies. And you may end up that micro companies, even though there might be more of them, they're still preparing accounts under FRS 102. So might not be as beneficial as thought out, but just some considerations there. So let's get into those FAQs. These two are linked to rules out there in terms of year-end changes, so we'll have a look at those. A company is considering extending its year-end to 30th of April 25, so that the year-end 30th of April 2026 would fall under the new company's limit rules for audit. Is that okay? So obviously that 30th of April 2026 is after your periods commencing 6th of April 2025 and year ends 6th of April 2026. So it would fall under the new company size limits for audit. Can they change and extend the year end to 30th of April 25? Absolutely you can. With a bit of pre-thought, you can make the most of this for your business or businesses you're an accountant for. The only thing to be wary of is that you can change your financial year end if you haven't changed it within the last 5 years. Now, I know some people, some businesses made the most out of this change in year end and extending year end during COVID, while there was, obviously quite a lot of uncertainty. So it absolutely is okay to extend year end. Just make sure that you haven't done it in that last 5 years. The next query is, could the 7-day rule be used to enable a company with a 31st of March year end to take advantage of the new thresholds earlier? And the answer is yes. So the 7-day rule allows you to change your accounting reference date, which means you can extend that 31st of March year end to the 7th of April, which goes after then your periods commencing 6th of April. So yes, you can absolutely use the 7-day rule to change your accounting reference date to make the most of these new size limit changes. Another query we've had, so a company will breach the small size company limits for 2 years and therefore need an audit for the year ended 31st of December 2025. So we'll go over that small size threshold and end up being a medium company. However, it will be small again for the year ended 31st of December 2026 due to the size limits changing. What are the implications of this? So as the query says, yes, they will require an audit for 31st of December 2025 because they've been medium for 2 years. However, in 31st of December 2026, when these new size limits will be into play, remember they've said you can apply that 2-year rule retrospectively, meaning that if those 31st of December 2025 figures were small under the new size limits, you wouldn't require an audit because you've applied the 2-year rule retrospectively, and you could end up in an unusual situation where you've only been audited for 1 year, which is quite rare when that 2-year rule is applicable, but it can absolutely happen. Obviously, you'd have to be very close to the threshold, but a lot of businesses are. So there we go. There we go. I think a really interesting one of something quite unusual can take place. Finally, let's have a look at charities. So for charitable companies, they've got two legs of legislation because they can be small based on the company size thresholds, but they can also breach the Charities Act small thresholds of income over 1 million or income over 250k and gross assets of over 3.26 million, and then require an audit still. So you've got those Charities Act thresholds where anything above those thresholds requires an external audit. And even if a charitable company is small under those new company thresholds, they're still going to require an audit. Now, what have we heard so far as to whether there is expected change? So the government have said they're going to review the thresholds within the Charities Act, and the Institute are behind this. They're in favour of this review, but we haven't heard anything formally yet to say whether that will happen or what those size thresholds could be. We've done quite a few charity updates recently, and a fair few polls have gone on asking attendees whether they are in favour of increasing the charity thresholds, and it's been quite a mixed bag. It's been quite a mixed bag. Some firms have been in favour of it, and some firms have said, no, you know what, it works quite well as it is. So sort of awaiting to see what will happen on that, but we do expect some communication on it, at least a conclusion on it to say whether anything will change and what. Thank you so much for today. If you've got any queries off the back of today or any further questions you'd like to ask, please contact us on the email. Please also visit our website to see our upcoming public courses. You can book via the website. I've been May and Aubrey, and I hope you've enjoyed this vlog and found it useful on changing size limits. Thank you very much.